Hi, and welcome to Three Questions with. Got my buddy Mike with us. Mike is a mortgage officer. Good morning, Mike. Welcome to the show.
Morning, Kevin. How's it going today?
Mike, I got so many questions for you today. It's just one of those days. I'm still seeing a lot of social media posts. Been on my fourth house. I didn't win. And just that discouragement. You have any advice to make that offer stand out over the 96 other ones going in?
Yeah. So, it all depends on the house. Like right now, we're seeing that limited inventory, which is keeping prices up, bidding wars continuing there. Rates aren't scaring people away. So you need to be strategic in the way you structure your offers. You really need to figure out what the seller wants. Is the seller looking for a fast close? They don't care about anything, or have they not identified their property that they're going to be moving to, and they need to a slow process, or maybe it's an estate where they need to empty the whole house out. Maybe you could say, hey, leave the stuff, I'll take care of it for you. That has helped me win multiple offers in the last 6 months, because a lot of the houses unfortunately hitting right now are estate properties, and these families don't want to deal with the getting a dumpster, getting crews in there, going through everything. They want to go through, grab the important stuff, and then move on. So strategically structuring and figuring out what the seller wants is going to give you the likelihood. If they want top dollar, that's what you're going to have to try to do. Figure out the best way to structure it to guarantee them the most amount of money at the end of the day.
So, Mike, we're coming into, I guess I call it the proverbial spring market. So I'm looking to maybe buy a house in April or May. Should I wait and go out and find the house I want and then call you once I know what I'm looking at?
No, so I tell people, this is historically when people start looking at Groundhog Day. Groundhog Day starts the spring market because that's what gets people to think spring. So the other part of it is everyone's kind of getting their tax returns and they're like, oh, I'm going to use this money for my down payment. You want to contact someone immediately. You want to make plans, because there's more times I have seen someone find their absolute dream house. They waited months and months and months to get their pre-approval, and boom, the dream house comes on. They go to get pre-approved, and I find something on their credit score we could have fixed months ago. So you really want to put a plan together months in advance, if you can. This way, you're prepared for monthly payment, cash to close. You have that pre-approval letter in hand. And while you're shopping, you could start saving, like, let's say your rent's $1,500, your proposed mortgage is $25. Start putting another $1,000 in your savings account. See how comfortable you are with that monthly payment. It's going to help set you guys up for success after you buy the property.
I really love that last piece of advice. See how comfortable you are with the payment. All right, Mike, let me mess with you. Let me ask you a question that the chairman of the Federal Reserve Bank can't seem to answer right now, but let's see if you can. All kidding aside, a month or two ago, looked like rates were going down. Like March, they were going to cut rates. It doesn't look that way now. So please take out your crystal ball and tell me what's going to happen.
Exactly. I always make that joke too, Kevin. I go, if I had a crystal ball, I'd be probably predicting Powerball numbers, not mortgage rates. But here's what we are seeing in the industry. I've been saying this since last year. Unfortunately, the Feds want inflation to come down. Inflation coming down is going to help relieve and give the Feds that ability to drop the Fed rate. What they really need to see is, unfortunately, Americans start to feel the pain of this inflation. And unfortunately, a lot of Americans, we have home equity lines, credit cards, all this stuff. What we're seeing now is consumer debt rising at the same rate as consumer spending, which is kind of a great news for mortgage rates. Not great news for Americans, though, because what we're going to start seeing is that they're running out of money to keep up with the current spending habits. Leads to a little bit of a harder hit recession. So I still anticipate rates to drop. I never anticipated, the last couple months was the craziest speculation I've ever seen in the market on rates dropping. So I've been telling my clients, I don't see really rates dropping until August and September. That being said, now you're already at the end of the summer. You have tons of people that have already missed out on mortgages, already missed out on properties, these low rates back in 2020, 2021, where they were in the 2s and 3s. They already have FOMO, the fear of missing out. They don't want to miss out again. The minute rates drop a little bit, you're going to talk about prices are going to start going back up. You're going to start seeing closer to 10% appreciation. That's been my prediction since last year, about this time, that we weren't going to see rates dropping until about the end of Q2, beginning of Q3 this year. So the last couple months, the people that got a little bit lower rates, good for them. but anticipate a lot of rate volatility for the next couple months until the market starts settling down with the data that's coming out.
So, Mike, what's the best way for people to reach out to you? How can they learn more, my friend?
Definitely my website, my cell phone, or my email address. And I can send you a link to all three of those as well too.
Great. Mike, I appreciate you taking a few minutes to call on the show. And as always, thanks for being my friend.
Thanks, Kevin. Have a good one.